So apparently a longtime Tesla bull is flipping and now saying that everybody should sell after basically saying that it was a buy all this time. And they're saying that it could plunge to $150, partially because of AI concerns, but also for a lot of other reasons as well. So we're going to dive into why this may or may not make sense. Now, he said this before we had a big day on the 31st where a lot of stocks went up, but this is something where he's saying that they could go to $150 when at the time of this being written, it was around $367, although they were actually down around 18% year to date. Like if you look at the past 3 months, they were still down 18.19%. And obviously, many stocks are down during that time period because of what all is going on in the world, but that's still obviously not a good sign. So apparently this guy, Chaudhry, drew a dramatic comparison to 3D Systems Corporation, which he claims his firm correctly predicted would collapse from its $84 peak in 2013. So he's basically saying like, look, we predicted this other one would collapse. Now we are changing our narrative from buying Tesla and always being bullish on Tesla to now predicting the collapse of Tesla. They've also had some other people questioning Tesla recently as well, which is UBS analyst Joseph Spack recently cut Q1 2026 delivery estimates to 345,000 vehicles, which would be down 18% from Q4 2025's deliveries. 7% below consensus expectations as well. Morgan Stanley also downgraded Tesla to equal weight from overweight in December 2025. Bank of America actually just downgraded them to neutral from a buy score, and they cited the growing robo-taxi services being an issue, accounting for roughly 50% of Tesla's current valuation despite high execution risk. Robo-taxi being 50% of their current valuation is crazy to me because by all accounts that I've heard, Waymo is actually in the lead in that area. It's also the second most expensive company in the S&P 500, trading at 210 times projected earnings. Now, again, they are up 4.69% today, but if you look at the last 6 months, they're down 16%. I already went over their being down 18% in 3 months. They are up 43% in the past year and up 68% in the past 5 years. If you compare that to the S&P 500, the S&P 500 is actually down 2% in the past 6 months. They are up 16% in the past year and up 62.37% in the past 5 months. Now, you don't ever get a dividend with Tesla. That's just kind of a given. PE ratio, though, is incredibly high. 345.85 PE ratio just doesn't make sense to me. And that is because a lot of this is all based on just hype. Somehow Elon Musk is very good at hyping up his products and the future. He's a very good salesman. Now, whether or not they can deliver on a lot of these things is usually the problem. Quarterly financials were down 3.14% year over year in their latest Q4 valuation. Earnings were up on EPS. They beat by 10.96%. Revenue beat was by less than 1%, actually 0.49%, which isn't much to really write home about. So at 345.85 as a PE ratio, not a one size fits all metric, not something you should base all of your investing on, of course, not something I would ever base all my investing evaluations on, but PE ratios are important to a certain extent. And if you look at their PE ratio versus the S&P 500 and what returns you would have gotten in the past 5 years, similar returns, but much, much higher risk with Tesla. And of course, past returns do not equal future returns, but it's just something to put in perspective here. Now, if you look at their balance sheet, their assets to liabilities are pretty good. If you look at $137 billion in assets versus $54 billion in liabilities, not too bad there, but their return on assets and their return on capital are both not very good at 2.16% and 3.05% respectively. If you look at what hedge funds are doing, they were mostly selling after Q4 2025 at a 70% sell versus 30% buy. We also had a lot of buying last year, especially by ARK Investment Management LLC. They had a sell in their recent activity, but Cathie Wood has been one of the biggest buyers of Tesla over the last few years. If you look at what Wall Street analysts are saying, the consensus is they are not really on the same page. 46% say it's a buy, 37.5% say it's a hold, 16% say it's a sell. 16% for a sell is actually pretty high for these types of stocks, but especially one that gets as much publicity as Tesla. If you look at how their earnings have gone, Really in 2025, not so good. Obviously, the whole political thing with Elon Musk did not help, but they have they did beat in Q4 on projections, but then they lowered their expectations or their guidance from Q4 to Q1. They also lowered it from Q3 last year to Q4. That's not exactly the strongest signal either, on top of some of their most bullish analysts saying, well, we don't think they're a buy anymore. We now think they're a sell. If you look at their PEG ratio, normally you want to see like a 1 or 2 or less than that. They have a 10.49 PEG ratio, forecast 12 months. So this also accounts for growth. It's an alternative to a PE ratio, and this is not good at all. It's actually way overinflated. If you look at their EV to EBITDA ratio, it's actually very high. So their PE, their PEG, their EV to EBITDA, all these indicators of what kind of value you might be getting at its current price versus their earnings and things like that, are all basically screaming in our face that it is not a good value right now at 112.15 for their EV to EBITDA ratio compared to the other metrics I already mentioned. Now, I also like to look at leadership. As you may know, 3.5 out of 5 is pretty standard. 57% would recommend working here to a friend. Nothing huge there. Pretty split on the approval rating of Elon Musk as the CEO as well. So nothing that's like, wow, this is exceptional, like Nvidia or AMD, but not a huge red flag either as far as what people are saying about the leadership here. People are just pretty split in general here. If you look at the results, if you look at how the S&P 500 would have done for you over the past 5 years versus Tesla, while also actually getting a 1% dividend or so on top of having very similar returns in just growth in the price, I would have much rather had the S&P 500 and slept much better at night knowing that I'm fully diversified. Whereas Tesla, with their PE ratios, their EV to EBITDA, their PEG, all these indicators that have to do with the value of a stock at its current price being extremely overinflated, and considering what they're trying to do in the future, which they do have ambitious goals as always, but are they going to be one of the top robotaxi companies? Is their humanoid Optimus robot going to pay off? Are they going to continue to sell cars, or are they going to continue to stop selling certain models so that they have more money for robots and AI? There's just so much in the air right now for Tesla. I for sure would not buy Tesla. I've pretty much had the same stance for the last few years. That's just me, of course. Everybody's situation is different. Everybody has different beliefs and look for different things. Would I hold them if I had them? No, I probably wouldn't. Again, I just don't see the indicators that this is going to pay off right now. If I could get some of those indicators down, maybe if their price plunged to $150 or so, maybe then it would be back at like an entry point of like, okay, maybe there is some value here. Maybe they could hit a new all-time high at some point if one of these major ambitious ventures actually pays off. But they do have increased competition in EVs. I just did a video about NIO stock, for instance, and they are killing it right now. So you're basically betting on hopes and dreams right now with Tesla, and that's just not something I want to put real money into in my situation. Obviously, none of this is financial advice. Do your own research. Let me know what you think in the comments, and I'll see you in the next video.